We just have a quick question here from Kelsie asking about pullbacks. Saying in the session we mentioned that we wouldn't mind seeing a deeper pullback in the euro US dollar today so that we can take advantage of it from a more attractive buying opportunity. But Kelsie asks, is it realistic for us to wait for deeper pullbacks? Isn't it unlikely that price will reach these locations? So thanks for the question, Kelsie. Now, when we look at something like market volatility, it's always important to keep in mind that with volatility, anything is possible. With markets, anything is possible on any given day. But of course, given a regular trading day, there is some levels that one would expect to be out of reach, so to speak, based on the average daily range or the average volatility for the pair. So if we zoom out on the euro dollar, it's not impossible, but it might be improbable for the pair to reach 112 in today's session just based on normal volatility that we've seen over the last day and over the last month. And how we know that, of course, is by looking at something like the daily pivots as well as the ADR. So the daily pivots is basically your expected volatility based on the prior day's volatility. So today's R1, S1, R2, and S2 is based on Friday's price action in terms of volatility. So that gives us a very short-term expectation for where the price might reach based on the prior day's volatility. And if we just use that as a quick gauge, we can see we expected a possible area for support to come in at that 113, which is just above the daily pivot that was reached. But based on Friday's price action, it would be very realistic for the pair to even reach that S1 pivot, the one that we highlighted from a medium-term perspective in today's session, just based on that S1, where the S1 pivot lies. So just based on Friday's volatility, it's very realistic to expect the pair to possibly reach this level. And then apart from that, to give us a more broader picture, we can also look at something like the ADR. Now, we set our ADR at 21, sometimes at 2 weeks as well, which is 14. So at 21 trading days, that basically gives us a whole month worth of price action. So this gives me the expected volatility high and the expected volatility low in today's session for the euro US dollar based on the last 21 trading days worth of volatility. So just based on the pivots and the ADR alone, we can see that that overall area on the euro US dollar, obviously also incorporating things like your support and resistance levels and your psychological price levels. But just based on the volatility metrics alone, we can see that this overall area at 112.50 has a very high probability or very realistic probability of the pair reaching this level in today's session. So obviously, when we have something like a unexpected volatility spike or a rush, that could easily see price, run past all of these levels very quickly, and we can even reach that 112. But just based on regular daily volatility, using things like the pivot, using things like the ADR, this gives us a very realistic, to your question, a very realistic expectation of where the price might reach in any given trading day. So I hope that helps with the question, Kelsie, in terms of whether what type of levels might be realistic for a pair to reach. And if there's any other questions, please don't hesitate to let us know.